Hi everyone, welcome to today's video. So the inflation data in the US is just in, and this month the inflation is hitting roughly 9.1% in the US. Now, interesting part is that analysts expected the inflation to be roughly around 8.8%, and the inflation situation has turned worse. Same is the situation in India right now, that if you take a look at this particular chart, you will see that the LPG prices in Delhi have gone up by roughly 220 rupees within a year. In percentage terms, this will be roughly around 20-25% increase in gas prices. So these numbers are very worrying. So three things that we are going to talk today. Number one is high inflation killing the Indian states, because in some states like Madhya Pradesh and West Bengal, the inflation is even higher than that in the US. So roughly 9.1, 9.2%. And on the flip side, some states like Kerala and Tamil Nadu are witnessing very low inflation. So why is that the case? Number 2 point is that, is this high inflation situation going to subside or become easier with time, or is it going to go out of hand? Third and finally, how is it that you should be prepared to benefit from this high inflation, or at least not get hit very badly due to these high inflationary conditions? Now, as common citizens, you and I do not have much control over inflation. This is a macroeconomic thing. You and I can't do much except for revamping our portfolios. But you and I can definitely save our taxes. And please check out the sponsors for today, which is Tax Buddy. They are an excellent tax filing platform. They help you optimize your taxes. Since the ITR tax filing is close by, do check out the platform. And the people who are viewing this video, they can get a 35% discount by checking the links in the description box. So let us get the discussion started, and first and foremost, let us quickly discuss that, is high inflation killing the Indian economy? This is the state-wise data for inflation, and you will notice that some of the states like West Bengal and Madhya Pradesh are witnessing very high levels of inflation. And on the flip side, there are states like Kerala and Tamil Nadu where the inflation is not too high. So obviously you might say that, you know what, the data is fudged, the data is not correct, there is no standardization of data. That would not be correct, because this is the state sponsored data and there is a method as to how the inflation data is collected all across India. And we look at CPI inflation, and this is what the basket of CPI inflation looks like, that it comprises of food, fuel, bunch of other different things. And then a number is reached, and this number can vary as per different states. Now, in case you are interested in understanding why there is such high difference in terms of inflation across different states, here is a very quick commentary. You can choose to skip it in case this section is not appealing to you. You can move on to the rest of the sections. So in India, the states can be categorized into three different layers or categories as per inflation. First, we will have states like Bihar, where the income levels is very low to begin with. For example, the per capita GDP of Bihar is roughly 600 US dollars. In India, the per capita GDP is roughly 2000 US dollars. So Bihar is 1/3 when it comes to wealth generation compared to rest of the parts of India. So to cut the long story short, states like Bihar are struggling financially, and inflation strangely does not impact them much when it comes to rise in inflation. Now, what do I mean by that? Let me explain you systematically. So if we go back to the basics of what exactly inflation is, it is the mismatch of supply and demand. So inflation can be created in two ways. First way would be that there is some kind of supply chain disruption. What is meant by supply chain disruption? So let's say that Maruti is able to make 100 Maruti car every year. Now, due to some supply chain disruption, that capacity gets cut in half. That they are not able to procure material, or they have to close down their factory, or the electricity cost has gone up, or the steel cost has gone very high. So as a result, what will happen? That Maruti will not be able to manufacture 100 cars. It will only be able to manufacture 50 cars. So in that case, what has happened? A supply shock has happened. Now there are fewer Marutis in the economy. So therefore, the price of Maruti is likely to go up, assuming all else is equal. So in economic terms, that phrase is called as ceteris paribus. So that is the word of the day today, ceteris paribus. What does that exactly mean? Let me know in the comment box. So this is called as inflation due to supply chain problem. Now there is a second reason as to why the inflation can go high in the economy, and that is called as demand side problem. Now demand side problem simply means that people have started earning a lot more money. Yes, there are 100 Maruti cars that are being manufactured, but everyone wants to buy Maruti. So what will happen? That despite Maruti manufacturing all those 100 units of car every year, people want to buy more and more because they are getting richer. And as a result, the price of Maruti car goes up. And inflation is exactly what? Inflation is प्याज टमाटर के rate बढ़ जाना, or a general increase in price levels. Now with states like Bihar, what ends up happening is that there is no demand side inflation problem. That because people are not earning enough, there is no shock to the economy from the demand side. Because if you go back 2 years ago, How much was the per capita GDP of Bihar? Maybe it would have been $590. Now it has gone up to $600. So as a result, there are no demand side inflation issue with states like Bihar. And as a result, strangely, their inflation stays in check. Now comes the second category of states. These would be states like Kerala and Tamil Nadu. So these are slightly more rich and prosperous states. So then why is it that the inflation problem is not hitting these states as aggressively? Now there are a few reasons for it. So first and foremost is the PDS or the public distribution system and the type of commodities they end up defining. So you can check from this particular newspaper clipping that in Tamil Nadu last year, the price of rice was roughly 52 rupees. Now it has gone down to 47 rupees. So in fact, there has been a shrinkage of a lot of commodity items in states like Tamil Nadu and Kerala. Why? Because the state procures a lot of material. So the inflation is being artificially kept low. So this is point one. Point two, Kerala and Tamil Nadu are coastal areas. So unlike Madhya Pradesh, which is inland, it takes lesser amount of money for goods to reach to Tamil Nadu or Kerala, because usually how many of the goods reach states like Madhya Pradesh? They will first come to coastal region, then some bus will pick up 100 Marutis, bring it to Madhya Pradesh. But that would not be the problem with coastal areas. So transportation and fuel costs would not hit states like Kerala and Tamil Nadu that aggressively as it would hit something like Madhya Pradesh. Now third is the remittance data and how people are making money in Tamil Nadu and Kerala. So you can see from this chart that Kerala is ranked number one when it comes to foreign remittances. Now there has been a worldwide economic slowdown. So what does that mean? It simply means that a lot of people who are working in areas like Dubai, Europe, etc., who have gone from Kerala and Tamil Nadu, they unfortunately lost their job. They are coming back to their native places, and as a result, what happens? The demand side of the equation gets solved, that there is not excess demand in these states because of the economic composition of the state as to how people are making money. Now comes the third category of state, for example, Madhya Pradesh. Now, unfortunately, in Madhya Pradesh, it is an inland state. So everything needs to be transported. So as a result, the fuel and transportation charges goes up on everything, fruits, vegetables, transporting commodities, etc., etc. So this is one of the prime reasons why the prices of everything in Madhya Pradesh has gone haywire and the inflation is very high. On top of that, in states like Madhya Pradesh, they are net energy deficient states and electricity prices are very high to begin with. Now we are witnessing a crunch, especially in electricity, power and commodities, and as a result, even the state deficit is also rising. Now, while I can't capture the entire complexities of inflation across all the states in India, I hope this brief discussion gave you a sense that number one, every state in India is going to suffer differently as per inflation and how inflation is hitting it. The net theory here is that some poor states are going to get hit more. You will say why? Because imagine Bihar again, that even if it has 4 to 5% inflation, that inflation is hitting whom? That inflation is hitting people who have very low savings to begin with. Because if you are only making $600 a year, they would have a very low savings rate to begin with, and 4% inflation on them is going to crush their economic well-being. So therefore, it is rightly said that inflation actually hurts poor people and poor states the more economically speaking. Even when the data tells us otherwise, that in Bihar, yes, okay, 5% inflation, but the problem is that it is hitting poor people vis-a-vis Maharashtra, where income levels are much higher. Now comes the second part of the discussion, that okay, is this inflation problem ever going to go away, or are we going to get stuck in this high inflation cycle forever and our wealth will be destroyed? Okay, so I can show you some historic data, and here is very important inflation related data since 1953. So you'll clearly see that there have been phases in the economy. For example, 1966, the inflation was roughly 14%. In 1974, during Indira Gandhi's government, the inflation was roughly 25%, which was again very high. Now, in 1980, it was 18%. In 1990-91, we were close to a balance of payment crisis that India was almost going to default on its debt. And during that time, again, inflation was roughly 14%. Over time, the inflation situation has been brought down, which has been a good thing for a country like India. Now, usually in a country like India, the inflation hovers around 6 to 8%. Right now, we are sitting at a national level around 7.5%, which is not that bad to begin with. To cut the long story short, what I'm trying to say is that inflation too is very cyclical, similar to stock market performance. So please do not believe that the entire Indian economy is going to go to dust. That is not going to happen, or at least the current data does not tell us that there is something fundamentally off in the economy and entire India and all the emerging economies are going to become like Sri Lanka and Pakistan. So please do not believe in that narrative. This is a very important point that you need to keep in mind. Now comes an even more important point, which is around the current dynamics of inflation. So right now, if you study the commentary, there is a lot of commentary happening on why inflation is happening. Some people are saying it is due to money printing. Some people are saying Russia-Ukraine war, etc., etc. It's a combination of different factors, no doubt about that. But this is a demand side inflation problem, not a supply side inflation problem. So many people are getting this incorrectly. Now, what do I mean by supply side? Again, please refer to that Maruti example that I stated in the early part of the video. You will understand the difference between supply and demand. Now, why is this a demand side inflation problem? Because too much money has been printed in the economy. By whom? By India? The answer is no. By the US. But India's economy is also linked to the US. So as a result, the impact is there on India also, other parts of the world also, including Sri Lanka and Pakistan, which are literally going to dust. Even these economies have been hit by excess money printing by the US. Now this demand side inflation problem is being addressed by the US as we speak. They have already been aggressively increasing the interest rate. Now what is meant by that? They are simply increasing the interest rate, which is incentivizing people not to spend money in the economy, but rather save. Now same goes for banks also, that they are not giving out easy credit or easy loans. So as a result, the entire flow of the money in the economy is getting shrunk. So that is the precise reason why the current inflation that we are witnessing, it actually originated with US printing excess amount of money, and that was a demand side problem. Now, why am I saying that this is not a supply side problem? Okay, so I will show you two data points. Please refer to this chart and you will see the capacity utilization of manufacturing sector in India. What is meant by this? It simply means that if the production capacity of Maruti is, let's assume, 100 cars, that is the utilization capacity. It is the maximum number of cars Maruti can make. Now, if you check this tab, you will see that this capacity shrunk quite a lot last year, but now this capacity is coming back. The capacity utilization is roughly 72%. Now, you'll say that Akshat, only 72%. What about 100%? Well, capacity utilization is rarely 100%. And here is a second chart that you can see that what in the past capacity utilization of manufacturing sector has been in India. So you can clearly see from this data that even if you analyze 2016 to 2019 data, it was roughly around 75%, and we are hitting that mark again, and that categorically proves that this is not a supply side inflation related problem. Factories are operating at their somewhat optimal level. There is no problems in terms of generating supply of goods and services. So that is not a problem at all. The problem is with the demand side. Even that is being taken care of. So what is my estimate or my prognosis of the entire situation? That is the inflation situation going to get controlled? The answer is yes. It is going to get controlled. By what time? I don't know. I am not a future teller, so I can't talk about the fact that when it will get exactly solved. But we are already on that right track. Governments are already pushing everything that they can, and this situation will get under control sooner than we think. Then comes the third and final part of this video as to what if Akshat, you are wrong, then what are we supposed to do in that situation? Okay, so then you are preparing to deal with a high inflation environment. What is it that you should be doing? I will leave you with 5 simple tips there. If you execute this with the assumption that the inflation is going to go higher from this point on, these 5 steps can help you save a lot of your money. So here we go. First and foremost, please invest your money. Why? Because if you assume that 6 months from now, inflation in the economy will become 15% in the US, and India, it will become like 10-12%, then what is exactly happening? 100 rupees kept in HDFC bank account will become how much by next year if inflation in India is 10%? That money will become roughly 93 rupees. How? Because the savings rate is 3%, inflation is 10%. So 100 minus 7 is 93. So your 100 rupees will become 93 rupees by year end due to high inflation. So what is it that you need to do? You have no other option but to go and invest your money. Number 2 tip, you should hold real assets. Now, what is the meaning of real asset? I had made a separate video, please go and check it. But one example here would be real estate. That if you feel that, hey, I have to protect my capital, whatever I am having right now, and I don't want that capital to go down. Maybe it will appreciate, maybe it will not appreciate, I don't know. But that 100 rupees should stay 100 rupees. Then you should invest your money in wealth preservation assets like real estate. Let me give you an example. Imagine a hypothetical economy that there are 100 houses and there is 1 crore rupee floating in that economy. Every house becomes how much? It becomes 1 lakh rupee per house. 100 houses multiplied by 1 lakh rupee is equal to 1 crore rupee. So 1 crore rupee is floating in the economy. And how many houses? 100 houses are there. Now imagine a scenario that government suddenly comes and they start printing more and more money. So that is what leads to more inflation, especially in these circumstances. So let's imagine that government prints 4 crore rupee more. Now the total circulation of money in the economy becomes how much? It becomes 5 crore. And this 5 crore rupee is going to chase how many houses? 100 houses. So every house become how much? It goes 5x or 5 times. So that is the value of investing money in wealth preservation asset, because in an environment where the inflation keeps on going up, these real assets continue to go up in value, not because there is something fundamentally that has shifted, but because of the fact that governments are printing more and more money and inflation is going up and up. So real assets from that viewpoint become very valuable. Now comes the natural question that I don't have that type of money to go and invest in real estate. Can I do REITs? The answer is no, please do not do REITs. There is a lot of commissions and surcharge that is applicable on REITs. I will make a separate video on that. So then what is it that you should be doing? You should be investing your money in inflation protection based stocks. Now what are these stocks? So these would be companies like Hindustan Unilever. I had been saying for the last 6 months that something like Hindustan Unilever has a pricing power. They have the brand value. They can keep on increasing their product prices to any end. Now should you be investing in Hindustan Unilever? I don't know. In 6 months ago, yes, 100%. And I had been investing in companies like Hindustan Unilever and ITC during that time. At this juncture, I feel that there are some very good US stocks and US stock options. I will release a video tomorrow about something like Apple and Amazon and why big investors are still buying these stocks at this juncture. Because exactly due to this situation, because these are inflation protection based stocks. Why? Because these companies have brand value and pricing power, and they can keep on increasing the prices of their goods to any end, and their business will be protected even in a high inflationary environment going forward. Now comes point number 4, that if you feel that inflation is going to go up, then you could consider taking more debt. Now, this is a dangerous point. Please listen to it carefully. Here is Mr. Mukesh Ambani taking more debt for his company. Why is that the case? Simply because he is betting some part of his portfolio thinking that inflation is going to go up in the economy, and going forward, interest rates are going to rise further. So it's not as if that you should take debt when the inflation is high. You should be taking debt because inflation is high and therefore governments are going to increase the interest rate. So taking more debt makes sense only if the interest rates are going to go higher from this point. So that is what Mr. Mukesh Ambani is doing. Now, if you are buying a house, if you are buying a car, you want some loan on it, please take a fixed loan if you think that the interest rates are going to go up from this point. Are they going to go up? Not going to go up? Probably a separate video. I'll make it separately, but I'm just helping you encapsulate all the options that you might have. Fifth and finally comes gold investing. Now, gold is not directly tied to inflation. It's a misnomer. It's a misunderstanding that inflation goes up, gold prices go up. No, that is not the relationship. What ends up happening is that due to increased inflation, there is increased risk in the economy. So sometimes when this inflation can become a hyperinflation type of situation, then what does that indicate? It simply indicates that the world is facing financial distress, risk has gone up, and as a result, gold prices usually tend to go up. So if you feel that from this juncture, the macroeconomics of India or other parts of the world are going to get destabilized, or US is going to go to dust, European economy is going to falter, then yes, investing in gold even now at these current prices might make a lot of sense. I hope you enjoyed the video. Please press the like button and I will see you soon.